Hey guys, how's it going? It's been so long since I've made one of these videos, and I thought I'd like to get back into the habit of doing it, not only for the sake of helping other people learn how to swing trade, but also just for my own sake, because I find that a lot of times when I just verbalize some analysis or a trade plan, it helps to either make better sense of it or to sometimes even prove that it was a bad idea. And the more that we do this, I think if we self-analyze, we learn to be better traders by looking over the mistakes that we've made. And also, of course, hindsight is one of the easiest ways to trade, but it's also really helpful to learn how to prepare yourself for the next trade setup that's going to be coming along. Like I've said in the past, swing trading is really such a less stressful way to trade when you compare it to intraday trading. I'm not talking down on intraday trading. Obviously, I do a lot of that myself. But swing trading gives you so much more time to prepare and to analyze and to go for the bigger targets and have much better risk to reward ratio than most intraday trading methods allow for. Let's just jump right into this. This video is really for all of my friends in the ATT room, the Advanced Trend Trading room, who know what we're looking for. I've made videos before, but the recent addition to what I'm doing now with the swing trading is using PipTalk's 520 EMA cross. And instead of having more lines on the chart, I'm just using this indicator with the green and red arrows. They show where there has been a 520 EMA cross, so I can quickly on a daily chart just find where the most recent cross was and then determine if I agree that the trend is shifting. And if so, I look for a setup or a pullback or one of the different confluence areas, which I'll go over here, to show if I can get into the trade if it's not too late. You know, I recently added this 520 EMA cross method to my analysis. It's not something I've been doing for too long. The 520 EMA cross is a nice filter to add though, and there are some pairs where you can just look at them on a chart, like this is the daily chart on the pound dollar, and you'll see that most of the crosses are good. And sometimes just taking the cross without any other filter or confluence will turn out to be quite a winning trade for a lot of pips. You know, use this however you want to use it, but we're going to go over some of my trades. Now, when I jumped into this 520 EMA cross a few weeks ago, I started out really good, and then I had some losers, and then I kind of lost faith in it a little bit. And then I came back to it recently, and I started out and I kind of fell flat on my face with my first set of trades not going right. And then instead of giving up again, I decided to stick with it, the 520 EMA cross, that is. Finally, after about a week or two now, I'm sitting on some decent trades, and of course it's a lot easier to talk about your winnings than it is to talk about your losers. Having said that, let me just go over with you some of the winnings and losers to show you where I made mistakes and where I'm winning or doing good in. So this is the pound dollar. We're looking at the daily time frame. Now I'm only looking at the 520 EMA cross on the daily time frame, as you all know. I have a few other indicators on here, but the only one I'm going to mention is the 200 EMA, which is this guy here. This has kind of become a part of me almost. I use this to determine the major trend. I believe that hedge funds and banks use the 200 EMA on the daily and the 4-hour time frame. I've heard that by enough institutional traders that I believe there's validity to that. I've also, of course, observed on my own the reaction that price has around the 200 EMA. So this is probably my favorite moving average of all. You can see here we had the 520 EMA cross, and from this point on I'm looking for longs. Now I didn't catch this trade, probably because I wasn't really trading this method on a daily basis when this happened. So you can see here I dragged my losing trade onto the chart so you could see. I'm going to drop down to the 4-hour time frame. You can see that we're looking at stochastic down here because that's another indicator I really like, which I've discussed before. But what I did here was I took a long. I was trying to get long right there. I saw this pullback. When I had a break from this pullback, I got long right there, and I used a very tight stop. And in retrospect, you can see that my stop was too tight. I put it right under the most recent swing low. Now, since we're trading on the daily time frame, I probably shouldn't have used the 4-hour with a tight stop of only 30 or 40 pips to try to keep me in this huge trade that I was trying to jump into. Anyways, I'm not saying that that was wrong of me to do, because it might have been the right thing to do. Who knows? Price could have come all the way back down to the 200 EMA and stopped me out down here had I placed my stop down here. But in retrospect, I can see that I would have preferred to at least add maybe another 20 or 30 pips below that swing low, and I'll tell you why. Stop hunts usually happen between a 25 to 50 pip level. If I'm trying to just stay out of a stop hunt here, rather than trying to stay out of the next swing low being revisited, then maybe instead of placing my stop loss 5 or 10 pips on the other side of that swing low, I should have been more like 25 to 50 pips on the other side of that. Okay, so I'm not going to talk too much more about those because you'll see as I go forward there's a lot of examples of very tight stops where I got stopped out. So this here was a stop out. The good news is I re-entered at the break of this trend line break up here. Actually, I waited for price to come above the double top there, and I took a new long, and I'm currently profitable. Let's see, where am I at right now? I'm at like 90 so pips or so. This is the euro dollar, and I took a long, I think it was yesterday or the day before. This is the daily time frame. You can see the 520 EMA cross. I didn't get the initial cross, so I'm looking for pullbacks, and I saw this pullback and decided to take it long, the small position. Mind you, even though we're using big stop losses between 100 to 150 pips, you don't have to enter with more than 0.5% of risk if you don't want to on that initial position. So that's one way of approaching these, is to add to your position as the trend develops. And that's kind of what I'm doing here. I'm sitting on like 25 pips of profit on this euro dollar right now. Here's the New Zealand dollar trade. I took it long on this one. I'm doing pretty good on this trade right now. Even though it was a bit of a risky trade, I'm up like 110 pips right now. It was risky because there was this double top, and I know a lot of people were thinking that there would be a reversal around this area. But I was looking at the 520 EMA cross, and I also zoomed out a little bit to look at older data to see where we were in the greater scheme of things. And I thought that it was worth taking a chance on this. Also, you'll notice a bit of a double bottom going on here, and that sometimes can mean a decent reversal taking place. So I decided to take my chances. I used a pretty tight stop when you look at it on the daily time frame. Drop down to the 4 hour. See, that might not be so tight after all. But yeah, I did just use the previous swing, but this time I learned my lesson with the pound dollar. Or did I? No, I didn't. I must have entered this trade quite a while ago. And I should have probably used a little bit of a bigger stop in anticipation of a market maker stop hunt. But I was safe and didn't get stopped on this one. So currently sitting on about 110 pips on the New Zealand dollar. And what I like to do for targets, I've gone over this in the past, but I'll refresh your memory, is I like to use fib extensions for targets. So I will take the most recent swing and I will use a fib extension off of that swing, and you'll see here that at the 141 fib extension there is confluence with some support and resistance from quite some time ago. So since we broke this level here, and hopefully this break is a good one, we got the 200 EMA as wind behind us. I'm looking for in this area here as a first target. We'll see what happens. I'll keep you posted on this one. This is the pound yen, and all I did here was I took a 50% fib retracement trade. I've gone over this in previous videos in my advanced trend trading series of those 4 videos if you want to watch it. But we had a 50% fib retracement on the pound yen. This same setup presented itself in, I think, 2 other yen-based pairs, which I'll show you in a bit. We had the 520 EMA crossing, so I'm kind of bullish at this point. If we can get a trend line break of that trend line, I think this move would be pretty healthy to the upside. Of course, we have the 200 EMA above us, but there's a good amount of space above that. So I'm sitting on about 60 pips of profit on the pound yen right now. Euro yen is almost identical. I took a 50 fib retracement trade, and I used the 61 fib retracement as my stop loss because price does oftentimes bounce around between the 50 and the 61. Sometimes I'll get a bounce off the 61.8 fib retracement as a good entry, but I like taking the 50 fib retracement level entry, and I sometimes use the 60 as my stop loss plus a little bit of a buffer to anticipate a stop hunt there. I think I used 25 pips, yeah, as a stop hunt area. So far we're good. We're looking at about 60 pips of profit on the euro yen, but that's nothing, right? Because we're using large stop losses, so we want to see a risk to reward ratio of at least 2 or 3 to 1. US dollar CAD, I'm short right now. I'm up about 20 or 30 pips, basically just 200 EMA going on. We got the 520 cross, so we're in a downward kind of momentum. I took a trend line break. On the pound New Zealand, this is a bit of a risky trade because we are right in support and resistance from previous levels. I was going off the 520 EMA break. We got the 200 EMA behind us. So I took a small position to the short side, which right now is sitting on 90 pips of profit. The stop is up here, right above that swing before that. We'll see if we get a break of this. If price is going to hover around this area for too long, I probably will move my stop to break even, because if this turns out to be support that can't be broken, then I don't want to stay in this and risk losing on this trade since I'm already 90 pips in profit. This is the US dollar Swissy, and it's currently at break even. I think I entered this one yesterday. It's a bit of a risky trade for a few reasons. One, we got support right here. We have the 200 EMA that we're bouncing into, but we had the 520 EMA cross, and if you'll notice, these 520 EMA crosses on this pair have been very clean, and that's one thing I like to look at, like, is it choppy or is it clean, this pair? And right now they've been pretty clean break. We'll see if we get a break of this 200 EMA. I think I put 1% of risk on this trade, so if I lose it, it's 1%, and hopefully, you know, it'll break down. I did have a trend line break here, which I think I did on the 4-hour time frame. Yeah, I entered right there, and we'll see what happens. Again, I'll use the fib extensions as possible target levels. On the pound Swissy, I'm also short. I think I'm in about 25 pips of drawdown right now. This is the Australian dollar. I'm long on this one based on the 520 EMA, looking for a pullback and a break. So far we're doing okay on this one. It's following suit with a few of the other dollar-based pairs like the New Zealand and the pound dollar, sitting on about 67 pips of profit. And as you can see, I am in a bit too many trades. These are demo trades, these are not live, so I'm kind of flapping my wings a bit and trying this out a lot, but I might be over trading here, but I'm also learning how to apply the 520 EMA in a more sound way by doing this on so many pairs. Okay, and this is the last one. It's the Australian dollar Japanese yen. It was a 50% fib retracement trade, very similar to the pound yen and the euro yen, and so far we're doing pretty good on this one. The 50% fib retracement is a really nice trade to take, especially when you're coming out of what seems to be a new trend development like this, and you have a pullback which is inevitable. When you have the 200 EMA as confluence by the 50 fib retracement level, that's such a good setup. It's probably one of my favorite. Anyways, like I said, I might be over trading, and I'm not suggesting you do it on so many pairs, but because we're on the daily time frame, all I really need to do is check up on these trades once or twice a day and kind of babysit them in that way, and it doesn't take very long. So maybe doing multiple pairs is not such a bad thing, especially if you can learn to read the pairs or to find which pair might be in a nice fluid type of a movement and stay away from the ones that are entering into a choppy zone. Alright, I'll talk to you guys soon. If you have any comments, feel free to leave them. Have a great time. Bye.